Okay, I'm running the 3-period RSI on the daily charts. And I just wanted to make a note to the reversal signal that came before the serious sell-off in this Australian dollar. And the signal that causes this sell-off, this sell signal here, you're going to sell because of that invergence. There's divergence, and then you get that. Plus you get this beautiful intersection. So this is like the middle of an Andrews pitchfork. If you consider this to be one tine and this is the other one, so you just have a way to project into the future. Right, you're kind of just taking these two mountaintops, draw a line. So it's finding support at a momentum angle the same way it is here. Right, so this, now this is a kooky looking chart here. And if all you did was sell above 70 and buy below 30, where here you didn't really get filled. And of course you have another problem with that wick. And so this is a great trade here. Of course, I said that you can't cash out till here, but even this one has a faint, very faint triple negative reversal where, but you get a perfect top bottom here where you don't get a perfect top bottom here before this collapses. Now this looks like it's really poised to drift up and just start climbing out of this hole now and start going after all these tops. We got a crushing kind of trapped and oversold, whether you admit it or not. It's down deep. It's not making new lows for the year like or for the 3-year period like Australian, but it did. But it's getting a deep discount there. And then you got this situation where this has to become resistance tonight and the rest of the month, because if bottoms become tops, it should keep selling off there. It blew through this bottom, this doji. So we've already cut through that. And now this has, I'm putting buy limits in tonight to capture a possible. So I want to trade ideally, I want to trade this hammer. I want to be the hammer. I want to get in on that hammer, ride it to the scalp, which was here, and then we blew through that last night. We blew through that scalp zone. And I think I barely got filled on these 12-hour orders that I put really far north. So that was another thing. I had them all placed in there. As you could see in the last video, I placed all those sell limits up there. And I had various expirations. So the ones that lasted 12 hours, I only got a partial fill. And those were real spaced out. Those are really, and some were scalps, and not everything was perfectly, in other words, it wasn't, since there's not enough money in the account, I couldn't really load up on very many swing trades. I had to make them scalps, and in doing so, they have tighter stops, and in doing so, naturally, you have a high probability of getting stopped out. But you're not blowing up the account, don't forget. So in the last 15 minutes, I picked up about a couple more tickets here on limits. So I'm aggressively getting in on limits like I did last. I usually aggressively get in on limits in Asia because you usually get this very quick sell-off in Asia. Also in London open. There could be a harsh sell-off anytime. I look at it this way. I'm a fireman, and I'm making money putting out fires. So I see fire and I throw tickets into the market. And depending on how fast this stuff's going on, of course, here on this euro dollar, this amazing 8-hour straight down crush where it's almost like this is all day down, just 20 hours, just brutal. It's got to get to here. I can't wait to get to this price. I can't wait to get to this price. And it's coming through here like a knife through butter through these prices, because this hole is so big that it's just so easy to fill, right? It's lost its resistance. There is no resistance up here because it's just fresh air. It's just complete uncharted water. The hard part is accepting the fact that the market may only move like this and never keep going. That's the hard thing to accept. So if you're looking to just make 20 pips, which is or 10 pips or 15, you can constantly buy here with a 20 pip stop to make your 20 pip your break even, right? You can see how even if you started putting in 1Ks every 20 pips for how much money is in your account, that at some point you got filled on two tickets. And so what, right? Well, you just do that over and over again. You just have to keep doing the same dumb shit over. Occasionally you get some amazing, like, wow, look at that. Look at that amazing, it's like totally planned out, and it goes exactly how you think it's going to go. So I'm still on pure limits on this account. I thought about putting the dollar yen on here, but there's not enough money in the account. If you trade lightly, you could trade 12 currency pairs, but it's really hard to run currency pairs that are so complicated that you can't even get out. It's hard to, if you can orchestrate the entry, you should be able to orchestrate the exit. And of course, if you don't have the script written for that exact take profit, then you want to get out, go flat on everything if you're up. So this is the last day. The markets are closing in like 20 hours. So you get one more run we could make here, I suppose. If I go to the 4-hour chart, obviously this guy's crushing north. We got a top bottom here that, like, to buy this at the market, I just buy this. What I do is I just buy it on a limit and have a really greedy target. So a very tight trailing limit. So it's about a trailing limit instead of a trailing stop. So here's a 40 pip, 15 minutes, 4 pips deep to make 40 pips with a 20 pip stop. So this is what I'm really, the only way to really rebuild this account or even make money, just make money, is to really get that part right, the entry and the coverage area and the sizing, because that's all that's going to matter. You can have the most popular thing and put it in the wrong part of town where nobody comes, or you can have a place that is too popular. You can't keep up and people are pissed off. In other words, you can't get filled on the ticket. You can't make any money in that situation. It looks like we could still get filled on this Australian dollar. So I got my buy limit sitting in there. And like any of these currencies could pull back harshly at any moment. I figure that's also built into this scheme of buying for a half an hour, 8 pips deep for a half an hour. in Asia. Now, when the U.S. is open, you're going to have to get in 10 pips deep, right? When the volatility kicks up, for you to make, let's imagine you want to buy 20 pips deep for an hour. You got a pending order sitting, maybe is a big fat ticket. But what you're trying to do in that situation is, irregardless to structure or RSI, you're just trying to buy 20 pips deep. You want something on sale. It's not on sale yet. And then you'd say, well, how do you know that it's going to bounce off of 20 pips deep? And you don't. You don't know. And that's the fun part of trading, is you don't know. If you knew, it'd be like, what's the point? It'd be pretty boring if you knew. If everybody knew how everything was going to turn out. I mean, even there, you're driving to the store. I mean, there's so much shit that can happen. You're not alone. I mean, the markets exist because other people are trading them. And so it's like real life. It's just a fucking mess. It's amazing anything gets done. It's amazing that you can make tons of money, that you can make tons of money trading, because people are like, 95% of people lose. Yeah, but 95% of people maybe they're expecting things to be so steady, and that's why they have a moving average and all that stuff. They need a guide. I'd like a guide, please. Is there a guide for this strange place we've landed? I'll be your Forex guide. I mean, of course, these people are making money. It's funny when you take these different time frames, like the daily and the 4 hour, you match them up, so you get a good setup on. Hey, I'm going to make them all look bullish. This doesn't look bullish. They all look bullish. You got to look at this daily chart. Are you kidding me? This is the weakest pullback, and really, if I had the 2-period RSI, I'd have a reversal right here on this chart. I guarantee it. I'd have a reversal on that. But yeah, this thing's, wow. So it looks like New Zealand, Australia are going to come ripping back tonight. And look at this thing just cutting through. Now my targets are pretty damn ungreedy. And of course, this is the argument for relative strength index is the name of the indicator. And this is the strongest currency out of all these currencies. This is also the currency that's been the most abused currency. Very abused. Just devastated. But that's spread based on this broker again. Oh, plus, look at this. Look at the most stable currency pair. No wick. Look, no wick. Wicks will kill you, man. I mean, because even if you don't have the stop in there, if you're in any kind of size, anything that's big, you're fucked. That's why you need more than one trading account if you trade like that. Because you blow that account up, and that would just mean that you lose whatever's in that account. It's not like you blew up your car. It's not like you just lost money. Saying you blew up your account's like saying you blew up your car. I mean, my car's on fire. No, it's not. It's just out of gas. So whatever you're, and it's just weird. You wonder why people are trading, You're just too curious to make money, supposedly. This Australian dollar is so insane. Now, here's where people get killed selling, going short RSI. They'd be like, dude, it's overbought in a downtrend. Sell the Australian dollar. You just get annihilated on that trade. That is the most overbought, strongest currency on these 4 pairs. And if I had to get in something at the market, it'd probably be the British pound, because it hasn't left the station quite yet. And the New Zealand. Although the pressure buildup on the British pound is really intense here, because you've got this hole, this really narrow slotted hole here that goes to here. I would say this area here would just be, it'll just pounce that area. It's cutting through there so hard. And you take out yesterday's high, the day before, you take out Friday's high. I'm sorry, last year's high, the end of last year's high. Holy shit, look out. Same thing here. This is certainly the healthier. Now, as far as long-term strength, this thing's already, this did not take out the lows from September. And when it cut down here, if you had a limit on this rooftop, on this top bottom on that doji, and then you had a big fat ticket on here. So you always have to think of that. And who's not selling for scalps off of this, right? So I could go up here and place in orders. These are single drops. First, I would mark off the box, and then I'd start throwing in various ratios up here, like, wait for the data to come in here. Here's the 12 pip stop, 14 pip stop. And how many do I put in there for the scalp? I would say, yeah, there's going to be more orders focused in this area. And then I could just go for, of course, this is a 12-hour, 8-hour tickets. I could see it getting up there. So when US opens and it punches into there, it comes flying back out. Here, same story. Maybe when London opens, we'd be up here ripping into this window. So I put sell limits up there. 8-hour sell limit crop. And if I fix the scale on here and did this big drill down, see, now that looks like they're going to fill my tickets right now. And this looks like, no way. That's the daily chart. But if I zoom in, it's like, oh boy. Well, here, kind of no way, but that's quite a price window, huh? We all know they're going to be a scalp fest in here. So I'd put in some tighter stops, maybe. All right, I'm just going to go for now. Here's where you're doing it. Do the labor saving device. Okay, how about a 6 pip stop? That's tight. Eight hours. So I can just fill that area there. That's crazy amount of selling up there. Look at this weekly. How do you like that big hammer at the end of the year? It's just too fucking hilarious. Same thing here. People say, what do you think of this flash crash here? I think this is going to what is this, the election, or is this just like, look at that. Look at that fucking move. October flash crash 2016. Right? Is that October 2nd? And so, look at this flash rally. June 19th. Huh. But that's quite the recovery. And of course, I'm sure everybody thought this was the low that would never be taken out. Until boom. Quite a move, gosh. It's British pound. This looks really shallow. Drift. Okay, so it looks like we're going to break out here. I'm going to try to get in for some greedy targets now. Blend it in with my just 40. So here's 2 hours. $18 risk. There. Trying to make 60 pips. See if I find another place to keep launching that one. Okay, let's try to do that same trade here. And maybe I'd be more conservative and put it here, because what if we rip back here and then crush that? Here's a nice divergence I just missed on the 1 hour chart. Look at this little triple bottom with a triple divergence. That's clean. Here's the exit for the scalpers. I think we'd blow through that. So last night we came ripping back to the here's last night's buy right there. So when I signed off, we came up to here, and then right here, and then they kicked it back. There was a buy. Another kick at now the sellers are coming in at this top. So if I was in really big from here, I probably would have got out on something here about this breakout window, because we just broke out, took out the high yesterday. We know that's always a place where it rejects initially. This guy's going strong. So here I might put this ticket here, trying to make 28 pips. 2 hours script. Okay, so now this looks to me like this is a good idea, because I can see that this is fair value here. If we come flying back, if that's a real breakout, we're going to come at least to here or deeper, and then it'll mess around. But I know that in the end, I'm looking for it to just keep going up. I think we just popped above this price too, which is the high from 2 weeks ago. So tonight we just poked into this window and came flying back off that, I think. Really have to take that wick out to see it. Okay, so the scalpers that sell on the bid here, they got filled. The black's the bid. So is the white, but the black is the... so they just missed that by... Well, somebody got like an amazing fill on that, right? If they just put it dead there. Now, how long does that guy ride that ticket? Let's go to the 5-minute chart. So that was the bottom of the hour, psycho spike into that window. So now we can go to the 5 and see the 5-minute guys have updated, and those people, where are they getting out? They're short on that line. This would be their greedy exit, and they've already got out of something, because I'm sure they told themselves that this is the top. They need to get out of something here when it comes back to the breakout. And that's the window. This wick going back. Right, that's the only point. So then you go to the we'll go to the 1 hour chart and try to zoom in one level. right? So this is where it poked into was this wick here, but the other wick that was really a big deal was these wicks. That's why it's such a hard move off of that. So this is a lot uh, deeper view. And the reason all this is better than market profile because this shows you exactly where you put your tickets. Where the market profile is over here, taking up a bunch of fucking screen. It just doesn't make sense. I mean, I don't think it's not pretty looking like a Garley, but it just doesn't help anything for order placement. Okay, so their greedy target is here, right? And here's the other wicks that they punched through. Here would be the next target, so I will put buy limits here for 2 hours here. There's a very tight stop. So that's how I like to do it, because this way I'll make more money than if I trade at the market, because this is the logical place to get in, right? Do I want to babysit this till it pulls back here and go, oh, look, I got in on a pullback? Absolutely not. It's just not worth it. We're probably going to come back somewhere at some point. Even here, look at this New Zealand struggling to take out the high of yesterday. In this window here to that 20-yard line. So here I do the same thing. 2 hours. Let's buy right there. Buy a 3-pack. Here's a 7-pip stop without duplicating the entry over a 5-pip range. So this is very light trading. I'm risking $3 to make $5. Here is the 5-minute British pound. I can do the same trade here. I think here I'm going to go deeper though, because I don't really so I can come back here. This is get that 2 hours to cook. Come back and deal with that later. You know, so right about here is a nice view for me as far as the amount of compression. This is a little bit much, but here I can switch time frames and I can get my brain around 1 hour here. I can see a triple top here in closing. I see where they broke out of that wick, pulled back deep in, and this is where you'd have your limits sitting maybe on this wick top and tickets all the way to that closing top. You get filled there and you got to dump. You got to get out because it's coming up into, well, certainly this entrance here. You know, hopefully this is 40 pips. As soon as it comes near here, you got to be getting out of some. You don't know it's gonna cut all the way through, and you never really make a new high there, so you don't get that. Can just barely get a new high there. You can't really load up on it. This is why you have to scale in, because you have to start selling off of this wick top here. Right, that's the better trade. To have a bunch of tickets in here, that way you can get out here. And on and on and on. Just like this bottom became a top on the 1 hour. A perfect double bottom becomes a single top on the 1 hour, but you got to be there to pull that trigger. Whereas if you place limits to sell, so we plunge down here, which means you got to sell high now. Or did you put in buy limits here in this whole area, and then you had to get out of the market here? In other words, if you committed to, like, it's, where do you want to, how do you want to do it? Do you want to buy on limits here? And of course, no fills here, and then dump everything here when it comes sweeping back? Or do you want to sell here when it comes sweeping back. And in that case, you're probably going to want to put sell limits in here. A real bear puts sell limits in here. Gets picked up into sells. Dumps to this wick. Maybe they do it again. Dump to that wick. So here you don't even get filled. I mean, this is so quiet here. So this is where the breakout traders or the people that are accumulating in a 10 pip range. So if you're selling and building a position at this 20-yard line, and then you're not going to put on sell stops here. If you're selling, if you're building this thing on limits, you consider this to be a distribution phase. You're already assuming it's going to cut either this way or this way, but if your bias is this, you may have some sell stops here for confirmation, but you're getting a shitty price. Or you're selling every, just like if I think this is a bottom, I'm going to put a buy limit here, and I'm going to try to accumulate, but I never get a chance to. The next accumulation phase is this one, where it's sideways here. Anything sideways, any noise is either accumulation or distribution. Then explosion into the void. We fill it all the way to here. It's filled. It's got to go the other way and go full auction where you come down, accumulate, mark it up, one more markup. It's done. It's filled this void. Now it's going to go satisfy this void it left behind. Now it's going to try to satisfy this void, and then maybe it comes back in London, and you got a pack of limits down here for another plunge bounce scalp treatment. It just goes on and on. Here, this thing's cutting north. If I'd say I'd hate to chase that, so I'll chase it on 2-hour limits, try to make 28 pips. And that, I'm saying that market's got to come down in 2 hours and fill this. And that's got to be the best way to trade that for me, because if I'm going to put a buy stop here to get filled in confirmation, I'm probably just going to buy at the market with a tight stop. If I think the euro's going up, I'm just gonna look at it on the clock, because the limits, you just don't have to be there. The stops, you kind of have to keep dropping a tight stop in here and a tight sell stop. You kind of got it, or you got a robot that keeps putting on a bracketed hedge, like this guy Dieter, who this guy from Germany, something that sent me that robot. I couldn't change the settings. It's putting a buy stop and a sell stop, and I get it that it's going to make money when this, in other words, it'll make money when this happens, but it'll get killed when this happens, right? It's going to get killed on this. So 80% of the market, it's going to get killed. I don't know how he's even making money on it. He says he runs it on the Dow Jones or something. But it's got to get filled, and then also it starts to pyramid into the move. So what it does is, and I think it's also unaware of the spread, because if it chases on stops in other words, if it starts to put in sell stops really heavy because it's going down, that if it doesn't, and it's pyramiding here, but it gets itself in, it's got to get out of something. I don't even know how it's set up. But the limit thing is a lot less work, because you just put your limits in and walk away. It is set it and forget it, which sounds very irresponsible, but I guess it's harder in a way to get the order placement and the time expiration of the script that makes sense for what you're doing. I guess that's complicated. Whereas if you told somebody the market's going sideways for 20 pips, if it doesn't do anything in 2 hours, if it's only moved 10 pips, hit this button, and it might be a non-directional hedge, that'd make money too. But if you combine them, right, you have your market orders, you have your limit orders, you have your stop orders, and each one has a unique purpose. Because you just, if you're playing guitar, you can pluck the string with your other hand. You don't have to use your strumming hand. Doesn't have to be the only thing that's plucking it. You can just do a hammer on. You can do, all sorts of things. So the technique, if you limit entry, you kind of setting yourself up for a scenario that's already the ticket tells you what scenario you're trying to trade. You're trying to trade let the market come to me. Come to my price. I'm going to choose the price. I'm picking the prices here. I'm going to be shopping, and I've got a price in mind. I'm not excited about the pattern. I'm excited about the price, and the only thing with pattern trading, I think, is a market order. I mean, that's like, okay, here we go. We're in the pattern. Do this. Whereas the limit order is saying, for me, I can see the void. I need to buy that void or sell that void. Now, the market order says, what time is it? I guess MC Hammer trade on it. And the trend line trade is most likely a market order. I mean, you could put a pending at the channel confluence point of price meets the end of the channel. It should get there by X. And maybe that's slicing it too thin. At that point, you might as well get out the Fibonacci tool and find a place to put one of those tickets. And that would be the answer there, actually. If you put your orders in a 20 pip band around the 618, but it might be 30 pips on the guppy. In other words, if you put your orders in a cluster around a Fibonacci number, then I would say, yeah, Fibonacci works, because you're just giving yourself a fucking area to get in. But if you go for a broad area, then you're going to definitely reap the benefits of a cushioned entry and a cushioned exit. And the stop entry really is, like I said, when the news is out, something's about to happen, and you don't want to risk not getting filled, because if you, the old days, if you traded at the market, you may not get filled. It would just say requote. They'd lock you out. Like, on my phone, I used to try to trade at the market 3Ks with this one broker, and it would just say, oh, requote. And it was a game, because I thought it was fun. But they were waiting for the spreads to tighten up, because I think it was a fixed pip spread broker. So what they were saying to you is, spread's too wide, I can't fill you there. And then people would say, oh, God, you got a thing running against, they're trading against their customers. They won't give you the trade. I don't want the trade. It's because they're trying to cut down the slippage. I mean, do you really think that the brokers out to get you is like these fuckers that think they didn't go to the moon? But I'm beginning to believe now that there isn't one person on the planet that believes it's flat. And there's not one person on this earth that doesn't think they went to the moon. I think it's just an attention. If somebody is trying to sell something now, that's it. So I've been watching these guys that are doing the Flat Earth show, the anti-Flat Earth show, and they get these people that come on there that are just bullshitting, that they think the Earth's not. It's just a joke. And so here I'm getting all pissed off, and I'm thinking, no, there's just no way that there's anybody that. But then the guy said, no, there's people that really think that, and there was a guy that called in. Stephen Molyneux's show, and he worked in a warehouse, and he was like, "Oh yeah, no, Earth's flat." I'm like, it's like I can't even see the guy said I can't see the curve in it. I drove to work, I didn't see no curve in it. I mean, yeah, sure there was a curved road, but I don't know. These people are just trying to. Oh, looks like it might get filled here on this pullback. So we filled that giant hole here. Now the sellers are coming in here. So, sellers are coming in here right at the exit point. Classic Asian shuffle. And look how they come in right in here like clockwork. Unfucking believable. At triple bottom, boom, they're out. And I'm buying on. I'm going to get in here and just try to blow the account up here. Big fat 2 hours though. Here's a 1K for 3 hours. Now this is light trading. If I put a 1K down here, I'll find where there's just, I'll come in and just find where there's like a missing hole. Where I haven't had a ticket yet. Oh, I'm finally getting some margin going. See, look at this tick long. I have no market orders in there. This is the way to trade, man. Just completely lazy shit. The stop entry is as much work as a market order. I think the limit is got to be the ultimate. Next up to bet, I'd say the market order is more exciting. And of course, it's if you have a, I used to have this talking clock that would tell me what time it was, but then after a while I didn't hear it. So I don't know. I just have a sense of what time it is, I guess. Or hey, I'm kind of bored. Or if I see the market dropping, I got to wait till the end of the hour to pull the trigger on that, which to me is probably the most obvious trade is what is it doing every hour for the market trades, because the limit's just not going to matter. The only thing that would matter with the limit order is what is the last hour's range. What is the range of the last hour of the last day? Not the last month or not a 14 ATR. That's completely ridiculous. It's as bad as a moving average. There's no moving average. Other than a trend line on close, it's the only moving average I can even think of. The trend line on close. And setups. And setups are a market and stop world. The limit is just about trying to get really good prices. And with the ability to choose the length of the exposure to the market. Because what if they do fill you on these ridiculous tickets I just put in here? What if it does plunge into that shit? So, I just have to... Oh, getting more fills here. I bet it's on the British pound, maybe. Yeah, I put them in so damn tight. Here we go. I'm getting filled on the Australian dollar. I like that. Look at that. Pull back right to the pivot. So I get perfect fill there. This should also be a great... I do want to load up before it blows out that top. It looks like, but on see that daily, it looks like I'm chasing it on the daily. Like, oh shit. Half hour, it looks like it could still pull back. Yeah, I really... But these are tight stops. If they blow me out of these, I'll be out. But I hate that because I'm trying to get to this $50 of margin, right? I'm sitting at the same place I was last night. So I've been to 220 at the best on this account. 4 currency pairs. And I'm trading more aggressive tonight than last night. There's so many opportunities in here in a 10 to 30 pip basis. And then, of course, these 100 pip winners, 80 pips, 60 pips, that's going to take some time. I try to get as much diversification here. Here's risk 8 pips to make 20. 8 pips to make 28 pips. Now that's a good trade, ratio-wise. So I put a realistic take profit number in here too. Risk $5 to make 10 bucks. 10 of those and you got 100 bucks. I'm going to put one in super deep here, just for kicks. I'll put the 20 and the 28 goes deeper, because I'm expecting it to retrace into, so the whole idea there is I'm going to buy deeper with the better target, with the greedier target, because I'm expecting it to come flipping back up to where it's at. Okay, so now we're just waiting for the market to go down. This is the top of the hour. Let's see if we get a better price here on the euro. Wow. Look at this nice little triangle here on the 5-minute. And you get this kind of breakout trap, but really not. Just follow through beautifully. Then this one, sellers right on that tippy top. Here's your reversal, triple reversal for that setup. Then divergence, that gave you that. And I would say that's almost a hidden divergence there. Now the 5-minute chart's going to give you more setups. And they come to a conclusion real quick. There's your hidden divergence, but it'll probably fail. See, this is happening. It's like a quadruple divergence. This is happening underneath that line. And that's usually giving you the buy signal, which gives you that setup where you get more of a sold higher price. Got to take that out. We got to overcome this. So the people that trade this little baby plunge, they're getting out there. Yeah, just like here, they probably got out. Here. Here's the divergence that knocked the whole thing off. Started the party. We got 1 minute left to the top of the hour. Then 5 minutes after the top of the hour is going to be the next big deal. So the 15 does have a nice reversal on it right now, setting up. This is about, well, the 15-minute chart's going to give you more signals. There you go, boom. So you pull the trigger right now, buy one at the market based on that reversal. Doesn't mean it doesn't mean that it can't go below here and cut into all that. But if that happens, that's perfect for me because I actually have orders down there to buy. But I'm not trading at the market on this account. But if I was, but I'm already in. So that's the nice thing. I'm already in pretty big. There you go, top of the hour. So I got 5 more minutes here. Then I'm gonna close this. So I'm gonna wait till 6 minutes after the top of the hour, which is the another critical thing, because the 5-minute guys are going to be the 15-minute people, the 1 hour people, the 5-minute and the 1 minute people all come in. People are robots. They're all aware of that top of the hour thing. The 5-minute guys are trading really big. I said that once in a video. How do you know they're trading? Because, my God, these are really great RSI signals. And you got to know that these, that it's a clean signal structurally. It's a clean signal on the RSI. It's just a very, like Asia can start off really quiet, like it did down here. And once it starts to go, oh my God. And look at the ATR on that 5-minute. In other words, the robots are on this. In other words, I'm sure the robot knows a good setup, and so do people. And the robot that's trading really big. So is this the robot trading? Well, it's people trading. People are robots. People have built robots. Or is this just the natural? If you think Fibonacci is some kind of natural phenomena, then you would think that the 5-minute chart is a natural phenomenon too. Because the hourly chart, I wish I had a thing that showed the hourly timestamp here on top of the, but there's the top of the hour. I guess you have to drag this around. Well, that's 5 minutes before the top of the hour. Let's see if I get another. I guess I have to drag this to a another place. Okay, so take this to the, it's 5 minutes before the top of the hour. All right, you want to get in 5 minutes before the top of the hour. See this? 5 minutes before the top of the hour, then bam. We're expecting a huge, and of course, if you wanted to go for the bottom of the hour, it's not so dramatic. There's got to be some kind of indicator out there that keeps throwing these in. That's 5 minutes before the top of the hour. That's the end of the hour is coming. And you could plan the next. Where is it going to be in 1 hour? Are you going to sell it when it's up here? And this is when you take this forward. It's certainly more logical than Fibonacci time. This is just what it's going to be then. Okay, so at this point here, is it going to be up or down? Are you going to get out of whatever you're in? I'm probably going to get out on the way up to here. Anything above here I'm selling. In other words, cashing out of my longs. Let's hope. Okay, so the pound is setting up for a big burst. New Zealand's pulled back. I didn't get quite the fills I wanted. I want to buy here, and they never took it down there. Here, I kind of got filled a little bit. I didn't get to my $50 of margin like I did last night, so sitting in the same position, 180 bucks, using about $50 of margin last night, and is this the real breakout? So this is your classic breakout, pull back, and then follow through. It's a real breakout. Here we haven't even begun to get the party started here. So this will be the lagging currency, I suppose. The New Zealand and the Australian will lead the way. And right now, the one that broke out, one that got out of jail, was the euro dollar. Here's the euro dollar up 5 minutes, boom. So here it is. Oh, now the women traders take over, and people have already got out. That 5 minute window is pretty violent. So the sellers are coming in now a little bit to profit taking from that buy thing. And go to the 1 minute chart, and you're like, holy shit, look at this. Can we get through this window and then pop through the top in 1 minute? Probably not. So we're probably going to pull back a little bit, maybe. Stop on here, come flying back to here. So last night we did that, came all the way back to this. So here's the 1 minute chart. The bottom becomes a top. Sellers come in, and that's all they can get out of it. Because it starts to stop hunt that, and it's probably going to take another 10 minutes to get through the high of the day. What a nice pullback there. Look how this 4-hour chart is just an amazing top bottom setup. Amazingly stupid. Didn't quite make it back deep, but it made it back to this one. Back to the 15. The big brutally unbreakable 15. Now we're teed up. And that's going to be it. I'll try to get this account up to $300 because it's just it's difficult to trade 4 pairs, I must say. Oh, again, it looks like I might get a fill here in New Zealand after all. Look at that. A 5-minute chart certainly looks doable. And here again, you got this buy signal. More oversold, higher price. Like I said, the perfect setup on the 15, but it could still go pull back more. So buying at the market there was only one fill. And if I can make money in these other pairs, I can afford to buy this now. I can afford that pullback. 15-minute chart. It's crazy, man. Trading 4 pairs like this. Now, same thing here. If this could pull back just a little bit more, as the euro in New Zealand goes storming north, these guys, what's going to happen here? This is a perfect signal, though. Oversold, higher price. So that's it. See what happens.